G'day, welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us here at AusBiz. Let's take a look at what happened overnight. Global stocks rising. This after the central bank in Europe cutting interest rates while gold hit a new record high and iron ore tumbled. Well, the S&P 500 and Dow hovering near records. In fact, the Dow taking out a new record as chip stocks surged while stronger than expected US retail sales boosted investor confidence in the economy. Well, the rally in tech stock came on an upbeat forecast from Taiwan Semiconductor Manufacturing, the world's largest contract chip maker, with it beating market estimates for profit and forecast a jump in fourth quarter revenue, driven by demand for AI chips. Its US listed shares soared, while Nvidia also benefited. Streaming giant Netflix added more than 5 million subscribers in the third quarter, 1 million ahead of estimates, and its shares moved higher after the close there. Shares of private equity giant Blackstone soared to an all-time high after it beat Wall Street's profit estimates in the third quarter, as the world's largest alternative investment firm's assets under management hit a record $1.1 trillion. Shares of ride-hailing firm Uber fell, while travel tech firm Expedia jumped on reports that Uber has consulted advisors regarding a potential bid to acquire Expedia. Well, US retail sales increased 0.4% in September, which was slightly more than forecast. Excluding cars, fuel, building materials and food services, core sales increasing 0.7% last month. And weekly initial jobless claims dropped by 19,000 last week, which was below estimates. The data is further evidence of a solid US economy and has therefore eased expectations of further aggressive interest rate cuts. And the data saw the yield on the 10-year Treasury note jump around 8 basis points to 4.09%, the 2-year rising to 3.98%. And signs of a healthy spending by the US consumer pushed the US dollar to an 11-week high. The Aussie falling back to 67 US cents. And the euro fell after the European Central Bank cut interest rates for the third time this year. It said inflation in the Eurozone was increasingly under control, while the outlook for the region's economy has been worsening. It brings the rate of the EU's key deposit rate down to 3.25%, and money markets are now almost fully pricing in 3 further cuts through to March. Checking in on commodities, oil prices are slightly higher after data showed falling crude and fuel inventories in the US. Brent crude futures at $74 a barrel. Copper's off almost 1%. Iron ore has tumbled around 5% to below $100 a tonne. And the gold price climbing to a new record high of $2,691 an ounce, boosted in part by geopolitical uncertainty. And Bitcoin, it has fallen back to around $67,000. All right, so let's get across what we're seeing, particularly on Wall Street. Brad Gastwirth joining us from Unearthing Opportunities. Brad, good to catch up with you again. Lots to consider, not the least, of course, what we're seeing in terms of earnings at the moment. Any notable standouts for you?
Yeah, I mean, it's been a pretty solid earnings season. I mean, we had the Taiwan Semi numbers that just hit recently, and those numbers were phenomenal. The stock obviously benefited in the market after those results. But if I look at the large cap stocks, I would say the only ones that were a little bit more surprising to the negative side, I mean, ASML obviously slashed their forecast, saw the biggest one-day decline in I think over 20 years. You also had Tesla numbers that were quite disappointing from their production numbers. So outside of those 3 anomalies, I think we saw really stellar results across the board, and it's off to the races at the end of the year.
How do you rationalise what we saw from ASML, and then of course, as we've just had with Taiwan Semi, what we're seeing in that space at the moment?
Yeah, it's actually a great question, Andrew, because ASML certainly they slashed those numbers, and that stock certainly reflected that post the results. The ASML mentioned the issue with China, and then I think the ASML issue also really is predicated on the fact that the U.S. is stopping them from shipping equipment to that region. So I think it's very much a region-specific issue. If you look at China in terms of buying semiconductors and what the tariffs and what has been banned from a U.S. perspective, that's had some major implications to a lot of the chip companies. And remember, even Nvidia saw a big pullback the day they announced or the U.S. announced, the banning or stopping of some of their chips to China, the stock obviously, that short bounce, it was short-lived. But that being said, I think you're really seeing that region being the impact of ASML, and then Taiwan Semi talks about AI strength continuing, and that's why they had such great numbers. So I think you still have the early innings of this AI phenomenon. I don't think this is over anytime soon, and there's companies that have the largest exposure will benefit.
So, yeah, you talk to obviously that growth we're seeing in AI, clearly also that migration to the cloud. Which companies are in the best position to benefit from those moves, do you feel?
Yeah, I mean, on the semiconductor side, Nvidia is still one that I've talked about over and over on their program. Even on the days of downside, I say it's a good time to accumulate. I think Alphabet is doing incredible things. Microsoft is really doing a great job getting people to upgrade into their AI suite, and Microsoft is continuing to put out solid results. I think Meta is in an interesting spot. It wasn't one of my top five large cap, but I think you have to look at it. One, the advertising side has been picking up, but also you look at the sort of the TikTok debacle and what's going on. I mean, Meta has been a big beneficiary of that. So I think there's a few different headwinds that were helping out Meta. I'd say those are some of the large cap you need to focus on within AI.
Now, Brad, you mentioned Tesla with some supply chain and production challenges there. Does that also apply to what we're seeing in Apple at the moment?
Yeah, another great question, Andrew. I think that on the Apple side, I'm a little bit more concerned with their China exposure. They still get a significant portion of iPhone of revenue from China. I think there's more downside potential risk than upside surprise in that region for that company. So that's the bigger issue that I have on the Apple side. On Tesla, I mean, you also have that China issue because if you look at the EV market over there, I mean, it's booming. And if you look at the pricing, they have phenomenal cars that have significantly more features than they do here in the States that are a lot cheaper. So, their homegrown solutions are doing quite well. If you look at those Chinese automobiles, they'll never do well in the United States because it's 100% tariff imposed on them. So here they won't do it, but in other parts of the region, they will. And I think that's, strong competition against Tesla. I think also on the Tesla front, you have, at least from the incumbent auto manufacturers, like a Ford and a Mercedes, et cetera, their electric vehicle offerings are really much better than I think most people would have thought. The pricing is competitive and you get a little bit more bang for your buck. So I think that's also taking in on some of the issues with Tesla.
Brad, just in terms of the growth we're seeing with the cloud capacity, also that obviously means larger and many more data centers. The question, of course, being how they're powered. They're huge consumers of energy, and interesting what we're seeing in that space at the moment, because what we've had some deals from Alphabet, Microsoft, and Amazon using nuclear energy.
Yeah, and this is a really good point, Andrew, and I'm glad you brought that up because I think some people are missing this, and this is something that you need to pay attention to because on the nuclear side, you're having these large, the largest companies in the world investing hundreds of millions of dollars in nuclear. I think that, is very likely going to be another, used power source. It's sort of been forgotten. I think it's being rekindled, for lack of better words. But you're absolutely right. I mean, it's a space that we need to pay attention to. The energy grid, the grid is being so taxed with all these electric vehicles, with all the, AI, the chips. Our energy grid is really is struggling, and they need to find other alternative sources. I think nuclear is that solution. So, the companies are investing in it. We'll see what happens in the future, but certainly their companies are throwing big money at nuclear.
Have we heard anything in particular in terms of policies from either Donald Trump or Kamala Harris in regards to future energy policy, perhaps favouring nuclear energy?
It's a great point. I don't have insights onto that. I'd be speculating, so I'm not really sure who has a little bit stronger on the nuclear side. I don't want to fathom a guess.
Yeah, fair enough. All right. Well, of course, that's a watching brief at the moment, given we're less than 3 weeks out from the election. Brad, also, of course, we did have that result from Netflix out. Did you have a chance to take a look at those numbers?
Yeah, I saw them briefly. They just recently hit, so I didn't go through them with a fine-tooth comb. But the market likes it. I think it's stock, at least when I was reading initially, I was expecting to see a bounce, and I think the bounce took place. I'm not sure where it is right now in the aftermarket, but the subscriber numbers are solid. My first take looks pretty good. Again, I want to hear what they have to say on the earnings call, but the initial release that I got to read through quickly looked pretty solid. I think the stock's reflecting that. I think there's a lot of eyes on a lot of watching of their international subscriber numbers. I'll would like to see what those numbers came in. But ultimately, it looks like they executed, and the stock's reflecting that.
Yeah, so picked up another 1 million more, additional 5 million subscribers, a million more than expected there. Is that further evidence of the strength we're seeing in the US consumer? Of course, that also coming off the back of those higher than expected retail sales numbers.
Yeah, it's another really good point, Andrew. The retail sales numbers were a little bit better than what I was expecting. I think it was really, if it was going to be much stronger, either way, the Fed sort of looked good. I think the numbers are just going to fuel, the fire for this market rally. The consumer's certainly spending. Your point is absolutely correct. That, it's another reflection that the consumer's spending money. There's a little bit of fuel behind this market rally, and you have the Fed that's cutting rates to spur more demand. I think this is leading us into a very strong end of the year. But the retail sales numbers were quite solid, and then it's hard to really fight this market right now going into the end of the year.
Indeed it is. Brad, good to get across what you're seeing there on the US markets. Thanks for joining us on Unearthing Opportunities.
Thanks, Andrew.
Let's turn to our local market just ahead of the open here. We are actually expecting a negative start to the session. That's, of course, after we hit another record on the local market yesterday. In focus will certainly be those iron ore miners, because we did see the price of iron ore tumble some 5% overnight. But the flip side to that is that the gold mine is expected to do well. Gold hitting another record. Stay with us because the open is just around the corner.